everybody. Prem Johal here. Thanks for being here, first of all, and I hope you will find this useful and valuable information. I will go through some disclaimers because these are important, so you know what you would be dealing with going forward. I'm going to go straight into the presentation if you don't mind. Right, guys, so the disclaimer here is that the figures and numbers I've used are as of the 15th of January, which is obviously now stale numbers and figures. It's very complicated to predict what mining will look like because there are a few things that we know. One of them is that the difficulty rate constantly climbs up. With each new block, the difficulty goes up. That means to mine the same Bitcoin, you need more hash power than you did before. And this is one of the reasons why private miners get priced out of the market very easily. You know, some people say, well, I can just set up my own rigs and I can try and make, solar energy or whatever. Yes, but the moment you've done it, a few weeks later, you wish you had more equipment. So there is a very fine balance. So this is why it is good to be with a company that does it on your behalf and has a lot of capital behind it. If they have large amounts of money that they're able to invest on your behalf, then you're accessing their service rather than trying to mine anything on your own. Okay. Another couple of things to bear in mind. Bitcoin has some risks which are unknown. The unknown risk is the price of Bitcoin is completely unknown. If it goes down to zero, everybody in the world that even deals with Bitcoin is a total loser. Okay, there is just no way of recovering from that. However, because there are so many users and there's millions and hundreds of millions of capital gone in, we have some kind of a view that this is a sustainable long-term business as compared to many of the other alternative coins, which aren't really worth what they say they are most of the time. Some are okay, but most of them are simply not, right? Now, Bitcoin is simply a peer-to-peer digital currency, which is neither centralized nor regulated. This is its strength. Okay, so let's not change the discussion to centralizing or regulating it somehow. Yes, the flow of capital must be regulated to some degree, but Bitcoin itself cannot be regulated because too many independent partners are involved in it. There are people from North America that have ordinarily nothing to do with people from Asia, from people from Africa and Latin America, and all of them want a slice of the action. So everybody comes in and we are one large global community doing peer-to-peer payments using Bitcoin when none of the governments are able to actually agree on anything at all. And that's one of the strengths of Bitcoin, right? So Bitcoin is a currency, not an investment. It is a mode of payment. Please remember that, okay? If everybody was to accumulate Bitcoin and just sit on it, then it defeats the purpose of the currency. So hopefully, as its acceptance grows in the future, more and more people will be happy to buy goods, services, even buy a house with it. You can already do that in many cases. You can buy holiday packages, etc. So in order to spend it, it must be a viable tool, and that is what a currency is. It's a tool. So don't look at it as an investment. However, holding some of it with its price going up may seem like an investment, but it isn't. It's still only a currency. Please remember that. Now, the process is very simple. You need a server farm. Try and set it up yourself. You need a whole lot of capital and a whole lot of attention you need to pay to it. Let someone else do it, and that's called cloud mining. They have the capital. They have the enterprise, which is basically the initiative to do something productive. That's all that enterprise is. It's one of the 4 major components that comprises productivity. They have the expertise. They've got electrical engineers. They've got the cutting edge programmers that can remotely, from a remote location, control how the mines operate. And they have a shed load of electricity supply going in there. That's the major ongoing running cost of Bitcoin. And they have the superior most equipment. It cannot be that a company with hundreds of millions worth of investment into the actual infrastructure is going to allow themselves to fall behind. And this is where the private miner will always struggle, whereas a corporate cloud mining service is able to always remain cutting edge, and therefore we get to be part of that and have a slice of that. And most importantly, they also have a secure location. You can't just have millions of dollars worth of equipment in a shed and walk away, because this is why we're glad that they're actually in Iceland, which is remote enough, secure enough, and cold enough to make the whole operation actually very profitable. This is why they chose Iceland. Now, Bitcoin is produced in the server farm. It gets fed through the blockchain and into you, the miner. So the miner is the first person that receives the Bitcoin. And then what do you do with the Bitcoin? Well, you're going to do stuff with it, right? So there are traders and consumers that use it. And when they want to trade it with others or spend it on something or the other, it gets fed back into the blockchain. And this begins a whole cycle that we are now familiar with, right? In the meantime, the cloud mining services that do blockchain generation, Bitcoin creation, they are the service providers that provide various other aspects also, including improvements and software development and apps and everything else that to sustain the entire infrastructure. So therefore, I've put them in the middle slide here. Now, just really quickly, you cannot be a low-risk investor and expect high rewards, okay? I had to cover this simply because we also do gold and silver, so I want to lead into that with this graph here. So if you have low risk, you cannot expect high reward. However, if you have high reward, that also implies high risk straight away, right? You can be a conservative accumulator of wealth, yeah? But if you want to take that wealth and leverage it, or take any incremental income coming in and then redeploy it, repurchase, reinvest it in any way into the same business. If you run a restaurant, your cash flow, you reinvest it into opening a second and then a third and a fourth restaurant, you are using leverage, and therefore you become a high risk, aggressive, leveraged investor, okay? You cannot have these two qualities, which is a net accumulation taking place without at the same time as this. You cannot just accumulate income and sit on it unless you leverage it. You can't grow aggressively, okay? Then when you make your income and convert it into something like precious metals, you are being conservative. In fact, you're being more conservative than even holding your money in the bank. Why am I saying that? Because the central banks themselves buy gold and keep it in reserve to protect themselves from the fluctuations in currencies of other nations and other central banks. So central banks protect themselves against dollar, euro, pound by holding gold. If they are doing that, that makes them low-risk accumulators of asset. On the other hand, Bitcoin mining then has to be classified as an aggressive high-risk strategy. Why? Because it's relatively new, it's relatively less known compared to gold and silver, which has been here for 4,000 years, and the systems and technology and everything else associated with it is still being rolled out, tested, enhanced all the time. Gold has reached as high as it can get in terms of how fine you can refine it, what type of quality bars and gold coins, etc. you can have. I mean, there isn't much more you can imagine that can happen with gold. Everything about it is already known, whereas Bitcoin has a great uncertainty element to it, which is why it makes it attractive. And if there is that extra risk factor, that is exactly where your reward comes from. So income reward comes from Bitcoin mining, and the safety aspect is from precious metals. And what I would recommend is you need to find out where along this line here are you. Where do you fit in? Because when you are able to generate income coming from Bitcoin mining, you then have a choice to go back and be aggressive and do more Bitcoin mining with it, which is fine. Or if you want to be a little bit conservative, you've already got Bitcoin mining, you've already got a bit of aggression in there, then you can take the proceeds of that and actually be safe and go into metals. So you could literally use mining as a cash cow to build a metals portfolio, because otherwise you're going to have to spend your own pocket money with it. And if you did that, then obviously you have bills to pay, other things to do. So this is a choice that you need to make. I cannot advise you on this, but mining, the aggressive income element, can actually build you a fantastic precious metals portfolio on a monthly basis. All you have to do is keep saving it at the wholesale rates which we provide. Okay, we provide metal at wholesale rates. Now, when it comes to the type of income we're looking for, is you want really, ideally, as much long-term residual income as possible so you can comfortably retire and know that there's a whole lot of this coming in. That makes you a stable long-term investor. There's a lot of high-ticket items out there where you can get a shed load of commission up front, and when you did that, that's great, but the same person that paid you that commission, that same referral, may not actually give you any long-term residual income. So you have a spectrum here as well, where short-term commissions are good for all these new launches. You know, quickly everybody, the top leaders make a lot of money, and then everybody else is left behind most of the time. Well, guess what? We have a system where for the Bitcoin mining side, you're able to generate short-term high commissions by introducing people at the higher packages that we offer. And at the same time, the same people become long-term residual income feeders because they can access precious metals and they can access even more mining. And both of those build up your long-term residual. So we find a perfect balance here. You just need to decide how much of the scale you want to use between short-term commission and long-term residual income, but we have the ability to offer both. Now let's go straight back into Bitcoin mining without compounding. If Bitcoin is at 600, that is nearly $300 lower than where it is today. Today, last time I checked, it was around $885. So if Bitcoin goes down to $600, 1 terahash of mining power, this is the sheer power that you need in order to generate Bitcoin, will give you a return of about $81. Okay, now 1 terahash actually costs $150 with Genesis Mining. We give you the exact same thing at Swissquote Global. We are in a strategic partnership. Okay, let's bear in mind, first of all, that the difficulty level is not taken into account. There are no changes in overhead costs, such as, you know, the government of Iceland suddenly putting additional taxes on electricity, for example. That could change everything. Now, marketability, that Bitcoin remains a viable, marketable commodity and therefore liquid and therefore in demand. Okay, all this being constant, you can access Genesis Mining terahash power through us at exactly the same price. You can even use a free account if you're only interested in mining. If you're interested in the complex income potential we offer, as I've shown in the previous slide, then obviously you can upgrade to becoming an affiliate as well. However, if $150 worth of 1 terahash gives you a return of $81 in a year, that is 54% return, even if Bitcoin crashes down to $600 from where it is now. You are getting what? 54% after a $300 crash. That is still far more reasonable than leaving your money in the bank where it is earning peanuts, if you're lucky. Maybe just the salt, not even the peanuts. Now, if Bitcoin went to 800, 1 terahash would produce about 109. I've used this calculator. You can look it up yourself, AllosComp, and there's a way to look at it. But I've basically worked out 1 terahash will give you $109, which is 72% return. If Bitcoin went to 1,000, which it did on the 1st of January, that exact same 1 terahash will give you 90% on average. Okay. Now, there's a lot of conditions, as I mentioned before. A lot can change. Difficulty mining of a difficulty rate, and general market fluctuations, overhead costs. A lot can change. However, 90% is pretty good without even compounding. This is just a straightforward, flat, annualized return on Bitcoin mining. With 1,200, you're looking at 108% return without moving a finger. You could plug 1 terahash into your back office, connect the system to your wallet ID, Coinbase, Zappo, blockchain. There are many, many, many. Just plug it in and earn Bitcoin. And roughly, this is the rate at which you earn. What that means is if Bitcoin is at $1,200 for the rest of this year, for the rest of 2017, then by around this time in 2018, you would have earned back the amount you put in. But what you have earned back is not dollars. You would have actually earned it back in Bitcoin fractions. That changes everything. I'll explain that in a moment. Excuse me. So obviously, some people are coming up with wild predictions. If Bitcoin ever touched 2,000 or even 3,000, you're looking at significantly different returns. But let me not draw your attention to these big numbers. Let's just go with something stable, 72 or maybe even 54. Okay, worst case scenario, 54. Now, what happens here is, this is a screenshot from Genesis Mining, $150 worth 1 terahash. Our back office, 1 terahash, $150 worth. Because we are happy to tell you we are getting our entire power supply from Genesis. We are not adding anything on top in any way, like many of those binaries out there that you overpay and you get less power than you've paid for. For every dollar you spend with Genesis, it's as good as spending every dollar with us, okay? Now, 15 terahash is $1,950, and here you have $1,950 that gives you 15 terahash with us also. So throughout the entire sliding scale range, you can choose how many terahash you want, choose your purchasing value, and just go ahead and get yourself some mining. Now, Bitcoin return is not like interest on deposit. Bitcoin, interest on deposit, by the way, when you put money on deposit, the bank takes it and lends it out in the open market for a higher rate of return. When they get back the higher rate of return, let's say they lend it to some high-risk person who's willing to pay 12% on it. When the bank gets to 12%, they keep 11.5%, and the 0.5 they pass it on to you if you're lucky. That kind of interest has nothing to do with Bitcoin. Bitcoin is literally, as I mentioned, generated in a server farm, and you are buying power. And with that power, it gives you something in return. Just like horsepower in a car gives you a thrilling feeling of speed. That's how Bitcoin mining power gives you fractional Bitcoin, and that's your daily thrill, if you like. So it is not the same as interest on deposit. It cannot be compared to any financial instrument that is known at the moment out there. Bitcoin is hash power generated. Hash power alone decides how much you have, will decide how much Bitcoin you get. And this is where you have to be very, very specific and very careful, because a lot of people offer you a lot of matrices, binaries, cyclers, and all kinds of things. They don't even necessarily tell you how much hash power it is, and they don't even tell you what is the cost per hash that they are deducting on a daily basis before you get paid your fractions. If you don't know that, go to Genesis. You'll be comfortable and safe with a giant, properly structured company from Germany, okay? Bitcoin return is new money. It's brand new money. So obviously, when you look at this, it's generated in a server farm through electricity. And when it comes to the blockchain, and from the blockchain paid out into your wallet, nobody's ever used it. If you're a miner receiving Bitcoin, it has never been used for any purpose anywhere in the world at all. Therefore, it is neither interest related, and therefore it is actually, as far as I know, Sharia compliant for those that are interested in that aspect of it. Now, what does it actually mean? Excuse me. Very straightforward. If Bitcoin is at 600, now listen, it's 885 right now, or sometime earlier. So I'm going with a worst case scenario here, okay? Just to be on the safe side without being too aggressive. 600 is the scenario. 1 terahash costs you $150, and the difficulty level is as of the 15th of Jan. Let's say it's a flat difficulty level for the rest of the year. When your 1 terahash begins to work for you, you're going to get paid 0.005222462 as a fractional payout in Bitcoin per week. There is a cost involved here, the cost of the equipment, the cost of electricity, the cost that the cloud mining service provider deserves to take in order to run their operation and make sure you get the best service at all times. So therefore, the net payout to you is actually 0.0026. Now, this is what you can expect to receive on 1 terahash of power into your Coinbase or Zappo or whatever coin wallet you use. What does that mean? That means if Bitcoin is at 600, the value of this fraction is actually $1.56. You're saying, well, $1.56 isn't much. Hang on. You spent $150 on 1 terahash, and you're getting back $1.50 per day. $1.50 per day is annually roughly, no, what am I saying? Hang on a minute. Net dollar, oh, per week, sorry. $1.50 per week, yeah, times 52 is $81 per year. $81 per year is 54% return. This is without clicking advertising. This is without moving your finger. This is without doing anything. And that too, if Bitcoin crashes by $300 nearly. So this is not bad as a return over 52 weeks, is it? Obviously, if you had 10 terahash, you can expect $813, but then you would have spent 10 times as much on the terahash. So you would have spent $1,500 and you're making back $813 over the year. You think that's not much? Well, it's exactly the same percentage rate, which is why I've left this blank here. It's exactly the same percentage rate return on your initial purchase of 10 terahash. The same thing changes drastically if Bitcoin was at 800, assuming the difficulty is fixed. Okay, this is very important because this keeps going up. Now, for the same thing, you'd be getting 72% return, right? Now, obviously, you'd be thinking, well, 150 for 1 terahash is nice. I would like some of that and like to make this kind of money. But I wish I had 10 terahash. Now, 10 terahash is expensive. To some people, $1,500 is a lot of money. But guess what? We have an incentive for you. For our affiliate level packages, you need to become one of these affiliates yourself before you can introduce any of these affiliates. And all affiliates earn exactly the same according to the pay plan. So a silver introducing a platinum will earn as much as a platinum introducing a platinum, okay? So you could be at a gold level, for example, and introduce a whole bunch of platinums. You'd be getting the same commission as the whole bunch of platinums would if they introduced other platinums. What is the bonus you get? Well, excuse me. In addition to US dollars in cash paid in your back office after the initial 14 days, in addition to that, you get bonus in hash mining power. So you actually get hash power given to you as a bonus. Think about it now. If you had your own 1 terahash, and if you were to introduce just 3 platinum members, and I can assure you, in order to bring in platinum members, you're not looking for other MLM people. Not necessarily. You're just looking for people out there in the world that have a few $1,000s sitting, and I can tell you even now, a whole bunch of Nigerian bureaucrats, Indian politicians, industrialists, shopkeepers, restaurant owners, anybody with a cash flow business is sitting on a shed load of cash in the bank earning next to 0% interest. Those people are better off doing something with it that produces a greater rate of return. They're all looking for it. So they don't necessarily have to be involved in this. If you are clever, you will start looking in your local area for people that have the cash to become a platinum member. Now suddenly you're no longer marketing to MLM. You're marketing to them to come in as a regular member, regular saver, and their rate of return is slightly less because obviously the packages cost more than giving you 54% return. The packages cost more, but we'll cover that in a compensation slide another time. But what happens is each time a platinum member joins and pays up, that generates to you 3 terahash in bonus mining. You only need 3 of those to get to your 10 terahash mining power. See what happened there? You start out with 150 worth of terahash for yourself, introduce 3 of these, and now you have 10 terahash. Now, out of those 3 members, you can expect to make 813. That is even if Bitcoin remains at $600. If Bitcoin goes up to $800, those same 3 platinum members that you had introduced with 333 terahash given to you extra will now be giving you a long-term residual income of 1,090. Now, there are many other ways of looking at it, but I'm just going straight for the big ones because it's very simple. For each platinum member, you get $500. You introduce 3 of these, that's $1,500 to you in cash, over and above nearly as much $1,500 worth of mining power added to your back office. So, oops, you've not only made $1,500 cash here, but you've also got roughly $1,500 worth of terahash mining. And on top of that, you'll be making around $1,000 worth of long-term residual income over the year. And this is what I was trying to tell you here. You can have a residual income long-term along with a short-term commission element, both combined in the same system. Nobody else out there does this. I challenge you to find me one compensation plan that works off someone like Genesis Mining, who have nothing to do with MLM. They are just a wholesale cloud mining supplier. But because of our partnership with them, we can offer you terms and packages that are unique in the whole world. There's nobody out there that even comes close. They can't even scratch the surface here with us. So you get long-term residual engine that delivers you the horsepower to get long-term residual income. And that too, this income is paid to you in Bitcoin fractions. So let's say it looks like 1,090 right now if Bitcoin is at 800, but the reality is if Bitcoin is at 2,000, this will look like significantly higher. If Bitcoin goes to 10,000, this same residual income is going to be 5 figures, okay? So this is one way you can compound on Bitcoin by simply introducing new people, and your mining power keeps going up. So now you're adding more and more mining power without actually spending your own money on any of it. Next slide. Excuse me. If you were to assume Bitcoin at 800 now again, this is, I'm going conservative, it's more than this already, but assuming a flat difficulty rate of a couple of days ago, and without using a classic compounding formula, if you were to have a flat rate compounding, which is very simple, you start one day with 15 terahash in your back office. 15 terahash should give you enough to buy 0.2 terahash per week. So in the first week, at the beginning of the first week, you take your Bitcoin earnings and buy more terahash, which is 15.2 now. So week 1 starts with 15.2. That should give you enough to make more than 0.2, but we are going with a flat rate. So let's just add 0.2 every week for 52 weeks. In the halfway mark, you would have made around 19.2 terahash. In the 52-week mark, which is 12 months later, you should have 25 terahash roughly. If you just add 0.2, 0.2, 0.2 every week. In fact, actually, 19.2 will produce you much more than that weekly, but we are just going with a flat rate to keep this simple, okay? Otherwise, it gets really complicated. So if you were to add just 0.2 every week to 15, you can work this out yourself on a calculator. If you just add 0.2 52 times to 15, you end up with 25, okay? What does that mean? Well, if Bitcoin was at 800 as we started, let's say it stays at 800 throughout the year, for example, then 15 terahash would have given you a return of about $1,632, which is not bad. It cost you, 15 terahash will cost you 1,950, which is what I've explained here. 1,950 with Genesis is 15 terahash, exactly the same thing with us, okay? I'm using this only as an example. Obviously, different budgets will suit different ranges, but here you have 15 terahash costing you 1,950, giving you an annual return of 1,632 in Bitcoin fractions. So you've already made 2 Bitcoins here over the year by one time entering Bitcoin mining with this particular package. Your Bitcoin return is 83% on this particular package, okay, on this particular setup. However, in year 2, because of the compounding effect all along that you've been working 1 hour a week, well, not even an hour, 10 minutes per week, that's all you have to do to go in there and add 2.2 every week. So if you were to do that for 10 minutes per week throughout the year, you're looking at a total of 25 terahash. Now, 25 terahash will give you a return of $2,724 in Bitcoin fractions, not in dollars, but in Bitcoin fractions, if Bitcoin remains at 800 for the rest of the year. Very important. We are not even factoring in what happens if price goes up. Yeah, it can go down, in which case all of us lose. But if it goes up, which all of us hope, then obviously you'll be making significantly more than that. Now, 25 terahash will cost you $3,250, but you didn't pay $3,250. You only paid $1,950. And with the income you earned, you kept adding that to this. You kept adding more to this in the at the rate of 0.2 per week. You kept adding. So now you've got mining power worth 3,250 in your back office. So from your original 1950, you are now making a return of 166% at the beginning of year 2. Now, for the rest of year 2, I could have gone on with year 3, year 4, year 5, but you can imagine, right? You start with $2,000, 83% return under these circumstances. And if you compound it effectively, then you start your second year with 166% return. But 166 return on what? On your initial 1950. So let's say everything remains the same. You don't touch this and you go away on a 1-year holiday for the whole of the year 2, come back at the beginning of the year 3. When you look at it at the beginning of year 3, you would have already pocketed 83 plus 166%. Now you're looking at about 249% return on your one-time payment of 15 terahash. This is the power of compounding, 249% by year 2. This is the power of compounding without taking into account that Bitcoin fractions themselves can go up in price, and without taking into account that all along the way you might have collected a shed load of these as well if you are going to work hard and refer people. There is no free lunch. You don't get this for free. You have to refer people to the system, because what you're doing is you're not only doing them a favor by offering them significantly higher returns than the cash deposit, but you're actually exposing them to a system that even offers them gold and silver at wholesale prices, so they can feel free to express themselves as a conservative precious metals accumulator using income coming from Bitcoin mining, or an aggressive Bitcoin miner who wants to compound as long as it is possible and make more Bitcoin than the rest of the people who are actually wasting their money with a lot of Bitcoin-related Ponzi schemes that are out there in the market.